Hi, I'm Kristy Longfellow. I'm with Hobson Insurance, and I wanted to give you a little bit of information about business insurance. Some of the things to look for on your policy, some of the things that could happen, just to give you a general overview and maybe trigger some things when you're looking at your policy that you might say, "Hey, I want to talk to that agent about this particular thing." But when you're looking at your business insurance policy, some a lot of times they're called BOP policies. BOP just stands for Business Owner Policy. You're going to cover your building, your property, your content. They call it BPP, Business Personal Property. That limit should cover your furniture, fixtures, inventory, and equipment. And typically you want enough to replace it. If you have co-insurance on your policy, which you will see 80% or 90% co-insurance, that's an alert to you that says, I need to be insured within 80%, if it's an 80% co-insurance, of full replacement cost, or I will be penalized on any partial claims to the extent I'm underinsured. Um, I don't want your eyes to gloss over on this. I just want you to be aware that if you have co-insurance on your policy, it should trigger you that you could be penalized and you really want to look at your limits. Call me up. I'll help you review them. We can talk about what your current limits are and what they need to be. A lot of policies, if you have a good policy, will have an automatic peak season in there where it'll automatically increase your inventory coverage up to 25% or whatever it may be on your policy. If you don't have that, maybe you want to add it if you have a certain time of year where your inventory really fluctuates. If you take property of others in your care and do work to that property or hold it, there's a specific limit you want to make sure you have on your policy called property of others. It's not necessarily automatically included, so you really want to look at all of your limits and review them. I would be happy to review them with you, but property in transit, if you're going to shows, what is your limit when your property leaves your premise? That's a very specific coverage that you may or may not have, and it should be outlined in your policy. Employee dishonesty limit, unfortunately, is another limit you really want to look at because a lot of the claims come from people that you may know and trust the best, unfortunately. Some of the things that are not covered are something flood and earthquake. Those are called perils. If you have a special form policy, that doesn't necessarily mean flood and earthquake are covered. They're typically two things that are excluded from your business policy. So if you need those, you want to take a special look at it. When you're looking at your liability limits, you'll see maybe 1 million per occurrence, 2 million aggregate. All aggregate means is per year. So if those are your limits, you could have up to two $1 million claims in a year. When you see MedPay, $5,000 or $10,000, it's a little bit confusing. That MedPay limit is not how much somebody would get paid if they got hurt on your premise or by a product you sold them. That is simply a limit to pay whether or not you're liable. If someone comes in, trips and falls, needs stitches, your MedPay limit will pay out without you being liable. It's kind of a goodwill type of coverage to prevent a lawsuit. Some of the other things to think about, I'm switching over to liability now, is the product liability. This is a huge one. If you're selling a product of somebody else, whether it's firearms, tree stands, bows, those are the things I get a little more excited about because potentially they might hurt someone. And you are selling a product, whether or not you made the product, you still can be held liable and people are still sued. So a loss prevention technique, one good thing for you to do when you consider selling somebody's bow or someone's firearm or any kind, a tree stand especially, is make sure that your manufacturer has liability insurance. And typically they can add you as an additional insured for no extra cost. If you're a manufacturer, you're familiar with this. It's a broad form endorsement. So anybody that sells your product, your policy will cover them if somebody is injured because of that product. And retailers, I've seen it happen if your manufacturer or your supplier lets their policy lapse or doesn't have a policy for liability, you're going to be responsible if that person comes back and sues you and says, this tree stand fell and I broke my back. Kids get killed. Awful things. But if you want to protect yourself even more, have your suppliers list you as an additional insured on their policy. It's one more layer of protection. And feel free to call me anytime, have me run this by you again. I'm happy to. Another thing and something I see a lot with stores, if you own the building and you lease it to yourself, that's really common. Say you own the building in an LLC, but you lease it to your corporation. No problem, fine. If it's common ownership, you can insure it on the same policy. The benefit of doing that is maybe some cost savings, but you've got to make sure that LLC is listed on the policy as the building owner. I see that missed a lot. One of the things that you may not want to do that, maybe you want to keep the LLC separate and you can insure your property as a landlord on a different policy. If you have different tenants in the building with you, that's really important because you're going to want the tenants to add you as an additional insured, because as the building owner, you aren't going to always have control over the inside of the people that are leasing that space from you. So they can list you as an additional insured, and you can have that property, the building, as an owner. If the building burns down or the liability, anything that might happen at that property, on a separate lesser's risk policy. Then if there's a claim because of maybe another space or something to do with the building, and we're talking liability, that claim isn't going to affect your business. So that would be one of the benefits of keeping them separate. So a lot of people get confused with liability between property and liability. Property is your stuff. Liability is you get sued because somebody got hurt or somebody's property was damaged. These are just kind of basic things. I'm just trying to be helpful here on business insurance in general. Business interruption coverage. A lot of policies are missing this coverage. If there was a fire or something happened and you weren't able to operate, now everyone's probably heard about this now because of COVID. Companies don't cover pandemics. It's excluded. But you got shut down for a fire, now your business interruption coverage, if you have that limit, will kick in and it'll help pay your ongoing expenses, your rental expense, your payrolls. If you have to lease another space to operate out of during a particular time, the business interruption coverage would help you for that. Another coverage that you want to consider is hired and non-owned auto. If you own a vehicle outside of your corporation or your LLC, so you own a personal vehicle, but you're using it for the business, whether it's you or an employee, you're having them run a bank deposit or you're moving inventory to a show or whatever that may be. If you cause property damage or bodily injury to somebody else, you hit them in your vehicle, but you're doing it for your business has liability there. And some of the biggest claims I've seen come out of this office are non-owned auto liability. You pull out of a gas station accidentally on the way to do a bank deposit and you hit a motorcycle guy and he lost his leg. You want your business protected from that. And that is a coverage that I often see missing. It does not, like if you're having your employee work for you, drive for you, whatever, it doesn't cover their vehicle. It only covers your liability for hurting the other guy. The employee's body, if they got hurt in the auto accident, if they're working for you, should be covered under workers' compensation. And I'm going to do a separate video about workers' compensation just to try to spread some of this stuff out. I hope this is helpful for you. If you rent watercraft, big red flag, typically not covered, excluded. Liability on the water for owned watercraft that you rent, you need to get a separate policy for that. I tried to think of all the main things that that I see a lot of, or that you may be concerned a lot about, and I hope this has been helpful for you. Call me at 800-296-7985 or check us out on businessquote.com. I'm happy to answer any of your questions. I'm happy to review your policy. There's a lot of other coverages, and maybe I'll do a separate video. Cyber liability is a biggie. People, if someone calls in and does an order over the phone and or over the internet, and you ship them out your product and the credit card bounces, that's something called voluntary surrender, and there's no coverage for that. And there's a lot of other scams out there, and we can talk more about how to protect yourself from that. And some of the coverages there, you just can't cover yourself. You can't buy an insurance policy for. That's where your loss control comes in, and you need to have procedures in place and things like that. So I'm going to wrap this up, and thanks for listening. I hope this is helpful.